All right. Good morning, everyone. Dan here from tradingology.com and the trading room for April 8th we got today. And Dave from the Strong Market team will be joining us as well, our usual co-host. So good morning, Dave. Good to see you here on this fine Thursday.
Good morning, Dan. It is a fine Thursday. Beautiful weather here. Now you got some things you want to talk about today. You have become a fib master recently.
Yeah, I've been using these for many years, but I've just been starting to talk about them more and just how people are curious. And hey, how do you know it's going to go to there? What price levels? What's a good target? How do I know when enough is enough? Like, and we're in a bull run, right? How do you know when you should take profits off? What's a good when you're out in free space and out in all-time highs? You have no idea to know. So I've studied fibs for years. I've listened to multiple people. There's probably 100 different ways that people use these.
Yeah.
So I have found what works for me. And I'll just use the Dow as an example here for you. This works on just about any indicator on any time frame. It's kind of a magical thing, this Fibonacci. If you've never studied the Fibonacci sequence in general, it's a very interesting thing. So I definitely recommend it for anybody that hasn't doing just the underlines of it. And it's a sequence where 1 + 1 = 2. Then you add the number before you. 2 + 1 is 3. 3 + 2 is 5. And that just goes on exponentially.
And the most important relationship between those numbers. So if you go, the Fibonacci sequence starts 1, 1, 2, 3, 5. And if you do the ratio between like the 3 and the 5, continues throughout the entire sequence. It's 0.618. It's called the golden ratio. It's one of the most important ratios you can find in nature. You can find it in trees and flowers and grass, and it's an important ratio in nature. And it's also, as you're going to demonstrate here, it's very important in the stock market.
Yeah, it's part of your anatomy, like your belly button to the top of your head, your fingers. It's amazing how many things the Fibonacci sequence shows up in.
Yeah, it's incredible.
All right, so, and as most people do know, there's tons of tools, right? In TradingView, I have pitchforks, shift pitchforks, modified, blah, 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 all these different things related to fib retracements, fib extensions. I use just the fib retracement itself, and I've added in a few of the fib extensions to it. So our members can definitely check with us on how I set this up, but I have it. And the nice thing I found is there's a shortcut key in TradingView, which is Alt F for fib, which I can enable it. So now you see it's turned on. I click once. This is another part too, is people draw them differently, whether it's left to right, up or down. For an uptrend, you need to start at the bottom left, and where you start your point is a swing low. Then you're going to draw it to a swing high. And the way I define a swing high is 2 bars on each side that are higher for a low, and 2 bars above, or 2 bars on each side for a proper swing high. So that's how I initially define swing high and swing lows. So we're on the Dow. I'm way back. This is a monthly chart just to show the power of this. So I'm back in 1987. What happened then, Dave?
That's when I started trading.
All right, so we're going to start.
I started trading options. I did trade stocks before that, but that was the first March of 1987 was the first month I started trading options.
So everyone knows we had the great massive stock market crash, right? The whole world fell apart. We went from 2,700 down to 1,600. We just crushed it.
Yeah, biggest one day decline in the history of the market that month in October.
So that's obviously a low. So the way I define a low is 2 to the left. So here we have 2 that are higher. So that's definitely a low. 2 on each side. Here's our swing low. So I need to look for a swing high next to draw it. So I'm looking for 2 bars to the right of a high. So this is still higher. We got a higher high. So that's not a high yet. Now we finally got one right there. I'll zoom this in so you guys can see it a little bit better. See, this one didn't qualify because this is higher, so we had to wait until July of 88 till we got a swing high. So now I can draw my first fib. And I have the magnet turned on, which makes life super easy for fibs. It'll zoom me right to that bottom of that wick. I draw it right here. So there's our first Fibonacci sequence on the Dow, starting in 1988. I've seen people do it with 1s and 2s, 0s and 1s, whatever your starting point is here. I think I have the default of TradingView of 0 of this upper line, and 1 is the bottom line. And here's that 618 is the number that Dave was just referring to. 236, 382, 50, 618. These are all standard fibs that are part of the sequence. And then they match to the extension. So these are extensions up here, and these are retracements at the bottom. So I've coded these in, and if we look at, I'll pause on this, open up the settings for you of the numbers. If you guys, anybody wants to take a screenshot on that, here's where I have it. So the custom ones are 2.7 and 1.8. And then I've modified these slightly. So you can do different colors in here, whatever colors you like. I like the yellows. They are a specific way. You'll see why in a second. And then there's ways you can do reverse. So that's one way of manipulating the tool to see how you want it to do. But this is kind of high level of what it works for me. And you'll see why it works for multiple things. So I think that's one of the biggest issues is the standard default tools don't work. I think they only draw certain things. And this is a way that you'll see the magic. It's that, you know, just like in nature, it's like an amazing thing. So the key is you buy on the retracements when you're in an uptrend, because we're now in an uptrend. Each one we have higher highs and higher lows. This is after the 1987 crash. So we're looking for the Dow to go to 2511 now after it retraces to any of these yellow levels. If it retraces down to a purple level, we're looking for the purple target, and same thing for the green to the green. If it's a deeper retracement, we're looking for a closer target.
Oh, that's interesting. Yeah.
So that's how this whole thing works together. And we'll let this play out here. So as we step forward, we see we retraced. It doesn't always retrace to 50. That is a nice goal, but you'll see, and this is obviously a monthly chart. So I'm not saying you would trade this. This is so you can see the high level time frame. And then you can zoom down into the weekly and daily and do fibs on that too, and look for your smaller time frame targets. But this gives you this kind of like the quadrants, right? Hey, what quadrant are we in? Where are we going? This gets you good targets. Then you can overlay and look for congruency when you have levels line up on multiple time frames that are even stronger, which could also line up with Scott's quadrant system. But we'll just stick with fibs here and we'll watch as it plays out. I'll put a line at that one right there. Let me throw a horizontal line right at the target so we can easily see it. There's where it touched it. So May of 89, it hit that top level fib. This sequence is complete. We can draw a new one now. And where we have the next one is we go to the lowest point that we started with for our swing low. And then we got to look for another swing high. So now we have to wait until October of 89 for our next high to be established, and we can redraw.
Yeah, remember, you're working on the monthly chart, so these are longer time frames.
Right. Yeah, this has nothing to do with day trading. This is just showing the sequence of fibs. You can do this on a 5-minute chart. You can do that on a 1-minute chart. So if we want to spend more time, other sessions, we can definitely do that. I'll just quickly draw this one in. So we have a new sequence set up as that was established. So now we're looking for the Dow to go to 3320, which sounds really funny, but we're now in 1989.
Right.
And so if we're to break this bottom line, that would be like your stop for your high level. Not that you would trade it down to that on a monthly time frame unless you had massive funds or you were just leveraged properly. That's the way it works though. The stop is below the bottom line. So if we were trading anything, if this was a 1-minute chart or a 5-minute chart, the stop would be down here. So the entries in this area, anywhere you feel comfortable, can be multiple times if you want to scale in. Then the exits are up here. So that's how you entry, stop, targets. So now we'll continue the sequence. Swing high, swing low. We had a retracement down to almost a 382 here. And we're looking for a target up here. There we're retracing down and hit the 50. There's a 50 retracement, which works very nicely. Moving forward, boom, we hit it in April of 92. We hit the 3318 or 3320 target.
Okay, Andre is asking why a new sequence, because you need a new target. Once that first target is hit, I don't want to talk, put words in your mouth, but I mean, once that first target is hit, now you're looking for the next sequence for the Fibonacci.
Right, exactly. Once this is fulfilled, now we need a new sequence. And the way you start the next sequence is use the lowest point during the last of the retracement here. So the lowest point of the retracement is right here. We have a proper low, 2 to the left, 2 to the right. Then we're looking for a proper high. This one, let's see, we got a high of 30, where is it? 34.20, 34.22. So this one's the highest, this red one right here. So new drawing, bottom to top. And then our new target, I'm already going to show it off almost. New target's 40.88. Retracement hits the first level, doesn't quite get to the 50. And then boom, this one, we're just a rocket now. It's 1995.
Yeah, it was the beginning of the .com mania. And boy, it really did rocket, didn't it?
Yep, so fib. So this one we had to wait a little bit more for the fib to actually get a sequence because we had no proper high because it kept just going up and up and up. So here's our first proper high for a swing on a monthly time frame. So we'll start that. Here's our low point. There's our high point. And you think, holy cow, it's really expanding. We're never going to go to that next level. You know, the next level is way up there at 7,500. We're talking 4,000 on the Dow. You got to be crazy, Dan. Boom, right through it. And what we typically see, this is a little bit out of the normal. What you normally see on sequences where it rockets past it. Usually we see a retracement when it hits this target. Shortly, if not right after, it'll do a pullback right after it meets these targets. But this one had one more month and a half of push through because the market was so energetic at that time, but we did have a pullback. So here our target was met. Now we're waiting for a proper high again and a proper low, so we get to redraw. Here's our low. Get my tool. There's the high right there because we had 2 to the right, 2 to the left. Next target is 10,000. You're talking crazy stuff, Dan. It's 1998. Right through it again. The fibs keep playing out. No one ever thought we'd break through 10,000. It had a little ceiling around 9,200. This is what a lot of times you'll see is this type of activity. Did we get a purple retracement? No, we did not here. Okay. So now we're back up. 10,000's been broken. The world's on fire. Just everyone's happy. We get to redraw a new symbol. Here's
it was 1999. Yeah, party like it's 1999.
Right? Here it comes. .com's coming. We're not as bad as the NASDAQ. It'd be fun to do that. Maybe I'll do that sometime. So here's our proper swing high, because this one was not, because this is higher. So I need 2 to the left, 2 to the right. I redrew. Now what we're talking about, 14,105 is our target. I think this is one of the 2 times since 1987 that we had a stop. So let's see what happens here on the big crash. Because there we got a retracement down to almost the purple on the nuts. And we're looking at the stops down here at 6,900. Now we're talking, hey, we just broke 11,000. You're going to go to 69 for a stop. That's nuts. So it's all proper retracement, but just for fibs itself, does it actually hit it? Look, it never does. Look at what it hits. 14,105. Bang.
That was the top.
Fibs. You can't tell me that that's not magic. How do you find a top? How do you know when it's going to be? Right there.
Yeah, crazy.
Look at that retracement. Then we were in trouble.
Huge. Wow.
Because we never had a new swing high. So you were never looking for another high that you got killed in this because you got out right here. If you weren't out yet, this was your signal to get out because Fibs said you're done. And then we had the crash of, this is the GFC. This is 2009.
Yep.
But it never broke it. So all this downside, technically we hit a green retracement. So your targets would have been here for exiting. But I have seen them continue on after the green and purple exits. They're just not as consistent as keeping them color coded basically. But I have seen them still always go to the 618. Like you say, that is a very important number in this sequence. So that continues. Then we just start a new one because here we had a break. So now we have to start it all over again because we broke this. We never had a swing high to draw from. So you had to restart after the GFC. Then this continues all the way to current time. And on a monthly time frame, I'll tell you, we actually don't have a good upside target because we haven't had established a proper swing high yet. We haven't had 2 down months.
Since 2009?
Since the most recent sequence. Let me see if I can open it up because I got one where I got all these drawn in.
Okay.
So this is nuts. Yeah, let me load these guys. Should be a triple one. Yep. So here I've done it on dailies, weeklies, monthlies. And I was back at the old time. So all these green levels are target levels that have been hit over time that I was redrawing, getting ready for you guys. So here's where we are right now. Let me make this one bigger. Or I should say we haven't hit it yet. 34,423. But this one broke. So this broke from there. That's why we don't have a proper new one, because we have a new one setting up and we haven't had a new proper high since the pandemic started. Because we haven't had 2 down months in over a year. Everything's been up. So we don't actually have a proper on a monthly chart. We do on a weekly, which is more interesting now. So let's pull that guy over. Let's expand out the weekly. The weekly, we're looking at 37,605.
Holy cow.
Right? It kind of puts it into perspective now. This is what people used to say, if you compare this to 1989 or whatever, when Dow was at 40, you say, it's going to 7. That guy's insane. If the government keeps this machine up, this is where it should go until it breaks 26,000. I know that's a huge, massive 10,000 point swing, but that's the world we live in right now. Because that's what just happened when the last time it hit. So if we don't hit 37,605 and that SPY VIX turns out to play out, we might see this break and we might be down in the 20,000s. That's how you know your target's either or. So if we never break this, right now the pattern is we're going to 37,605 on a weekly basis.
So which one would take precedence, the monthly or the weekly there?
Well, higher time frames always more data, right? So on the monthly, we don't have a target high because we haven't had an established good swing high, just because of the fact we haven't had 2 down months after a peak. It continues up. And this one just barely qualified. I mean, I think it was almost to the penny here when I zoom in. This weekly high was 33,227 and 84 cents. 33,087. It was like $100 that it actually established, or is it not? Wait a minute. Did that week change? I was looking at this as a potential when this was drawn last week. So this actually is not a proper. I have to correct myself. This is wrong. Because this week actually beat this week. Am I reading that right? 33,227.
Yeah.
33,259. No, it is lower.
Yeah, it is lower a little bit.
Just barely. Let me zoom all the way and I can see it easier.
Yeah, it is a little bit. That's 327, and that was 259. Yeah. No, it's higher.
It is higher. Yeah, 259.
It's higher by about 16 points or something.
It's a numbers game in your brain there. I think that might have caught me. So yeah, we actually don't have a proper high on weekly either. Or where was the last one? That's higher. That's higher. Might be going all the way back here. Let me look here.
343. Yeah, it's higher.
This is higher. So yeah, that's not even proper there because that's higher. We got no weekly. This is
but next to that though is lower, right? To the right of it.
This one is, but I need 2.
Oh, okay.
Yeah, if you want to cheat, that's one thing. Be careful. If you start cheating and you say, "Hey, I only got 1, I'm going to call this my swing high," you may or may not get the same results.
Gotcha. Yeah.
Because this means that we hit it, but we're not getting a retracement for 3 weeks. We should see a retracement once targets are hit. That's one way to know, hey, if you screwed up or if you did, or if you cheat a candle, that's one way you can kind of see it happen. So right. I should take that one off, and we're in the same boat. That looks like it would be, but it's not. So close. And that's very important. Like you say, like even if things hit by just pennies or dollars, that is so important.
And they are significant. Yeah, you're absolutely right.
Because if this were lower, this would be a proper swing high, but it's not. And that tells us that we have a higher probability of going higher, which we obviously have. If this was a swing low and this was a peak, there would have been more potential, more expectations for this to retrace and be a target has been hit. So people think the dollars and the cents don't matter, and they actually do. When you beat those higher highs, that means something, and the lower lows mean something. So it all comes together. So yeah, right now on a weekly, we don't have our last target's been hit, because 33,160 was the last weekly target right here. So we don't have a brand new weekly fib. We don't have a brand new monthly fib. We're still in up mode. And then the daily, let's see what the daily is doing. Then we'll probably wrap this up soon. Here's where the dailies we're looking at, where I had previous ones back here. Here was the stop. Here was the entry. It was at 50. And then the targets were up here. Potential exits could have been right there. Since we got very close to it, didn't quite hit the fib level, but it got darn close. We retraced back to 32,000, which was the zero line almost. Then it actually did fulfill the fib. So on the daily sequence, we have just met the fib, and you had basically 3 chances to exit with a nice entry at the 50% retracement. So now we have a new fib, and that's where we're getting this 35,515, which is different from the weekly. So that's where you can kind of overlay your weekly and your dailies to see what they're doing. So let me pull up those, or so we can see those together. Yeah, the weekly we don't have. The weekly was 33.1. And the new daily is now 35,515. So that's hot off the press as of yesterday, because we just had 2 lower days after this swing high. So this is a brand new daily sequence fib. I'll get these lines out of here so they don't confuse anybody that's watching. Get these old target exits out. So our new target, 35515 and 50 cents, is real. I know it's past your 666, but maybe it's going to be 36,666.
Maybe. I was just pulling that one out of the air there because I like 666.
Yep. So right now, if you're looking for a retracement around anywhere between this 32,893. I don't have a shading tool I can draw quickly, or I can just use this guy.
Yeah, actually, that level we hit was the top of the 1929 trend line, the top line of that. That was at 33, just about where we topped out that day, 33.6. What is it? Or 33.518. That's exact top of the, almost exact top to the dollar of that 1929 trend line.
Yeah, which makes sense on it's hitting that trend line. It's also, so that's a good reason that it established this new high, because it pulled back from that, which allowed us to create a new Fibonacci sequence and set expectations. So if this retraces, that's where you can have entries and looking for a target up here. Until it breaks, you go with it, and you use it until it doesn't work anymore. And it's worked for, I think it's only failed twice on the daily basis since like 1987. If you go back and look at this.
Yeah, pretty insane.
Or here I started back, here's where I started after the GFC, so we had to restart. And there's where, look at this one, drew at 31.9. How many people would be crazy calling for 31.9 when we're sitting at 26?
Right.
Back in 2000. Nobody thought I was going to 31.9 yet, because look at how exaggerated that was.
Yeah. Yeah, or even like 2010, 11, 12, nobody would have been calling for a 31,000 Dow.
Right. Yeah, it did take a while to get there, but you had no drawdown to live through. If you went long anything in this area, or right here when we got the 3382 retracement, you could use it. This is one way, not advice, just one way. This could be entry 1, entry 2, entry 3, entry 4, if you want to scale in anything. And then you ride it out. You have 0 drawdown for over a year, and your target is 3,100. Bam! It just crushed it.
Yeah, 31,000.
31,000.
Yeah.
And we hit that, and it retraced after we hit it.
Yeah.
And yeah, put this on any chart, and you'll see it. Different time frames, different symbols. It's not like this is only, hey, this is the Dow, Dan. It only works on the Dow. This works on things, and it works in the downhill too. So the way that it works on like a down, let me quickly do this. I know we're over time, but we'll give you guys some extra minutes. So if we're in a daily and you say, how does it work on the down? Same thing, just different retracements. So you need to swing both ways. Let's see if I can find one here. Probably there for the high, and here for the low. So now I'm starting, turn the fib tool on. Now we're dragging this way. So now you got your retracements here. Look to the 50. You can't make this up. That's like hit it 27,124.8, 27,102. Then a retrace down.
Wow.
There's our target. Wham. New fib. New low wasn't established until here. So here's where you see how you actually, you don't move back the other way until you get stopped out. So here we got a retracement. There's the stop right there. It was killed because we started a new uptrend. So from this downtrend, if you were riding out the longest way, yeah, you got stopped out right here. And now we're in an uptrend. So you would reverse, say, okay, where's my swing low? Because I got a new swing high, then you go back the other way. So that's how you get stopped out, is if it breaks that initial starting point on highs or lows. So this is just an example of a downtrend being stopped out. And yeah, you can take common sense into account here too. Obviously, if you're watching and you know what's going on in the markets, where you're seeing whatever, you know, election happened 2016, or this is 2020, then the market's turned around. I see the 16. I thought it was 2016 for a second. So you can still, you don't have to completely rely on, oh, the fib says it's going down still, I'm waiting for more retracement, but so you don't have to wait here to get stopped out. But that is the rule of Fibonacci itself. So you can use your common sense to say, yeah, we're at a purple retracement, we're at a green retracement, we're out. You know, it's all about risk tolerance, but this is how you actually draw the tool, and this is how it works. Like
what day was that low there?
That low was March 23rd of 2020.
Yeah, and if you look on the SPY VIX, I think we hit a low of $3.25 at that.
This was when all the stimulus was announced for the CARES package.
Yep.
So if you're watching and paying attention, you know what's going on. You know that, hey, I should get out of my shorts.
Yeah.
I didn't quite make my target of 13.8 because the government intervened. And you know this is happening. So you know, yeah, I'm not going to ride this out because I know there's these massive $1 trillion stimulus packages happening. Use common sense.
Yeah, and I would have looked at the SPY VIX at 3. I think it hit 3 that day.
Let's pull that up quick. Yeah, it's off the chart. Look at that. Yeah, so you absolutely know, just like you said, if it gets below that, there's your buying time. So yeah,
3.46. Yeah, that was
just like we said about the swing tool. Don't use only one tool. So if you're looking at the fib and you say, here's my target, but I say, look at SPY VIX is down here in the buy area. That fib's probably not going to make it because we're moving. I'm getting out of my shorts and I'm getting into my longs. That can help you with your decision making. Absolutely.
Nice. I like it.
So we can pick on any symbol you want at other times, but that's where we come up with the magic. 5 minutes, it works. I'll tell you, it's powerful, so be careful. Don't get overconfident, but this will give you targets.
Yeah, you know, on the daily and the weekly, if we hit those targets on the fibs and we're over 25, 26, 27 on the SPY VIX.
Yep.
You know, you got to play the odds, right? Got to play the probabilities.
Yeah, if we hit this and we're up at that 25, above 25, which we most likely will be, then it's everything's reset and we got to wait. Just like right now, we're in reset mode on weekly and monthly. We don't even have swing highs. So that's something to take into account too.
Yeah.
So you guys that are members, hit me up. I'll give you, if you got a screenshot from earlier, set it up, because that's not the same defaults on like toss, but you can change it to be what you want it to be. And you can put in whatever colors you want. If you thought this was cool, please subscribe, give us a like. If this is good stuff, if you got any questions, let us know. I know I can't see the comments. Dave's taking care. So Andre, I appreciate you. I know you were looking forward to this on the fibs. So hit us up in the Slack channels. Emails is always available, support@tradingology.com, and Dave's team over at Strong Market is awesome for support at Strong Market for any indicators. So I'm working tighter and tighter with those guys all every time or every day, whatever we want to call it. But appreciate you guys coming out and joining us, and let us know how else we can help.
Yeah, thanks, Dan. This is great, good stuff. I love it.
Very cool. And there's your extra time, and we'll catch you guys next week. Have an awesome weekend, and Dave, enjoy your hot weather.
Yes, I will. I'm going out today.
Sweet. Take it easy, everyone.
Take care, Dan. Bye, guys.